CNBC released its annual Disruptors list of 50 private companies rapidly scaling with breakthrough technologies. We'll look at the likely IPO candidates on the list, and I'll highlight some trends and omissions. Plus, I'll share 5 of my new favorite startups that made the list. In IPO Radar news, Scale AI succumbs to the overpowering hypnosis of Mag 7 money. Welcome to the Axis IPOs podcast, where we explore opportunities to invest in the world's most innovative and disruptive pre-IPO companies. I'm Craig Stevens, founder of AxisIPOs.com, and we're coming off a couple of successful IPOs. We had Circle last week, which blew other IPOs out of the water. It was up more than 100%. It was up 250% at some point. Just a real blowout IPO for Circle. This week we saw Voyager, which is a space company that IPO'd on Wednesday. And then we have the Chime IPO on Thursday, and that's today, this morning. I'm recording this podcast, so I know that Chime is priced at $27 a share, and we're going to wait for it to open, which usually happens in the early afternoon. Real quick on Voyager, that IPO was up 100% at the open. I think it priced at 31. It popped up into the 60s. It closed, I think, around 58 or so. So very receptive audience on Wall Street looking to invest in IPOs. And that Voyager could just be base enthusiasts investing in a small company with a small float, but just good to see Voyager out there as a public company now. And it wasn't on our radar, but a few readers and listeners did report receiving IPO shares. I know Fidelity was offering shares. I didn't put in for that IPO because I wasn't following the company. And if I don't know about the company, I don't invest. I try to invest in companies that I've been following for a long time and know the background story. So I'm not looking to invest in just any IPO, although in this case, anyone who participated in that Voyager IPO had a nice pop there on Wednesday. Chime this Thursday, I think, is a better indicator of fintech IPO appetite in the markets. Circle has that crypto piece to it, and we all know the people who are enthusiastic about crypto will invest in just about anything. But Chime is a more traditional fintech, I'd say, that doesn't have a crypto component to it. It's essentially a bank. It's not a bank. It's a technology company that offers banking services. But it's a rather unexciting company when it really comes down to it. It's a banking app. It's a neobank. There's a lot of comparisons being made to SoFi. SoFi is an online bank, an online brokerage. They do loans, and I think they got their start in student loans. And there's a lot of investor enthusiasm for this company. It's on a list of growth stocks that are undervalued right now. It's been recommended by a lot of people I watch on Twitter. And so in the context of this Chime IPO, a lot of SoFi investors are chiming in to say, hey, well, if Chime blows up in this IPO, then SoFi is this derivative play. Now, that's not a way that I invest. I'm not a trader, and I'm not looking for derivative plays on this. If I can get an allocation from the Chime IPO, I'm going to invest. If I don't get an allocation, I'm not going to invest. I want to take advantage of that arbitrage, how these underwriters deliberately underprice these IPOs to produce that pop, to show that there's a successful IPO, and to give their wealthy clients a little boost since they're taking so much out of their accounts in fees. So far this morning, I haven't received IPO shares from Chime at Fidelity. It's about 10 o'clock. So the market's open. I'll be waiting to see if those land in my account. But at this point, I'm not too optimistic. If I get an allocation, I'll let people know through the newsletter on Sunday. And of course, those in our membership community on Patreon. Dominating the news this week is the CNBC Disruptor 50 list. And this is the 13th annual Disruptor list that they've put together. And I've always liked this list because it balances sort of the obvious candidates that should definitely be on the list with some of the unknowns and some of these companies that are maybe smaller but have growing revenue, have interesting technologies, and somehow made it through the selection process to get on this list. I've seen lots of companies bragging about their inclusion on Twitter, on LinkedIn. They're putting little badges on their website to say that they made the list. And so I think it's a pretty cool distinction for really any of these companies that get on this list. If you go back to the past several years, you'll find a lot of companies that eventually IPO'd. You'll find some companies that maybe never went anywhere, or just they never really turned into something large. And that doesn't mean they failed. Some of these companies just don't operate in large markets. So you might have a technology that's really cool and innovative, and you might disrupt some industry, but it may not be a trillion-dollar industry like AI. So inclusion on the list doesn't mean you're destined for being the next trillion-dollar company, but it is a nice distinction. So looking through the list of 50 companies, I like to see which companies we're already covering through our IPO radar process, through my IPO radar process that's on the website. When a company is on my IPO radar, I've researched them and I've written about them. There's an article on my website, and if you search for that company on the website, you'll find an article. And so looking through this list of 50, there are 19 companies that I've written about that are on the Access IPO's IPO radar that made the list. And the first 7, the top 7, are all Access IPO's radar companies. And that's because there's a lot of public interest in these companies. They're large companies. There's a lot of private ownership opportunities, and they are pretty likely to IPO at some point. The top 7, Anduril, OpenAI. Anduril is number 1. It got a lot of attention this week. Number 3, Databricks, Anthropic, Canva, Ramp, and Flock Safety that round out the top 7. Going through the rest of the list, Stripe, Revolut, Aura Ring, the ring that tracks your heart rate and stuff, Perplexity, Scale AI, Rippling, Apptronic, Notion, Shield AI, Navan, Figma, Zipline, and that's it. So that was 19 IPO radar companies made this list, including that top 7. And there are a few on this list that I've planned to write about, or they're on my seed list, which is a giant list of companies that I intend to write about, or I might write about if they grow larger or if the public interest grows for these companies. For example, I've seen Octopus Energy on a few lists before, and it's one that I'm sort of following, but I don't really intend to write about it yet. But Glean is on here, and that's one I plan to write about. Sierra is another one, Abridge. So there are several companies on here that they're certainly in the back of my mind, but they haven't reached the point where I've done the research on them and added them to my news feed so that I know what's going on with these companies. A couple themes that I've noticed in this list this year, certainly AI. And, AI is becoming like .com. Everybody added .com to their name back in the internet days. Well, that was cool, but like everything now is on the internet, right? And so at some point, people have to stop saying we're AI or we do the AI of this, because everyone's using AI and it's not that special anymore. So just because you're telling me you grow fruit with AI in some way, or AI this or AI that, it doesn't mean it's an AI company. There are some LLMs in here, OpenAI and Anthropic, but there are some notable exclusions, like Mistral's not on here. Cohere is not on here. But a couple themes. So AI is certainly there. There's some defense autonomy companies. Of course, Anduril made the top of the list, and they are defense autonomy. And along that trend, there's a few other names in here that meet that criteria, and they could actually be Anduril takeover candidates at some point. There's still EVs, a lot of EV autonomy in trucking and school buses. A lot of robotics companies as well, which we would expect to see that. The trend toward humanoid robotics has been really big this year, and we see Apptronic on here. But I'm more interested in some of these industrial robotics companies that simplify processes for compliance or safety, that these drones and things that do jobs that are really hard for humans to do or unsafe for humans to do. Drones do them really well, and they're not in the form of humans. They're in the form of a robot that is ideal for a task. So I've seen a few of those, and I'll highlight a couple of those. And then some healthcare AI tools, a couple of these that help doctors take notes, or the ones that are really exciting is when AI is going to help us figure out cures for diseases. And so there's a few of those in here as well. But there's some notable omissions from this list. Certainly space. There's no space companies in here. And I think part of that is the criteria has to do with revenue growth and growing your customer base and growing your employees. And SpaceX has been on this list several times in the past. It's not anymore. It's almost like SpaceX has graduated. Relativity Space was on the list last year. It didn't make it this year. Axiom Space, another one we don't see. Also, nuclear energy and fusion energy. Neither of those have made the list. And nuclear is having this renaissance right now, and I have a feeling next year you're going to see more. I think the problem with nuclear is it takes a long time to build a nuclear power plant. Even these smaller plants that are coming down the line, they're going to take a massive investment, and it's going to take time. Fusion energy, I write a lot about that on my website, and I've highlighted it a few times on this podcast. Fusion energy is just not ready for prime time. Even though it's an exciting technology, it's going to disrupt when it does. And maybe at some point we'll see those companies on the list, like Helion Energy and Commonwealth Fusion. They are not on the list. There's really no mention of energy companies other than Octopus Energy. The other kind of obvious technology we don't see on here is quantum computing. And again, I think it has to do with the methodology. They have a bunch of academics who are looking at the data, and part of that is sales, and part of that is employee growth, customer growth. And quantum computing just isn't there yet where it's making the sales. But these are very disruptive companies coming down the line. And so I would expect to see more energy companies. I think there's also this venture capital lull in clean energy and green energy. VCs are tired of their investments in these companies not making them any money. Redwood Materials is another good example that did not make the list this year. I believe they've made it in the past. So these clean energy, recycling, and come to think of it, recycling is not on here, and certainly rare earth minerals and mining, cobalt metals isn't on this list, which maybe I would expect to see them. They're using AI and mining. So quite a few notable exclusions or omissions from the list. Now, regarding the top 6, I didn't notice this when I first went through the list, but I was on X, Twitter, and I saw a tweet from Ben Miller. Ben Miller is the founder and CEO of Fundrise, which is a crowdfunding innovator back in the days of 2012. They were the first real estate crowdfunding company to really grow and innovate in the space. And back in 2022, I talk about this a lot, and it's all over my website. Ben Miller and Fundrise started a fund called the Fundrise Innovation Fund. It's a way for ordinary investors in the U.S. who are 18 years or older can invest in some of the world's most innovative and disruptive companies for just $10. And I saw this tweet from Ben Miller, and it says, this list looks familiar. And he highlighted the top 6. And that's because the top 6 companies on this list are all core holdings of the Fundrise Innovation Fund. So if you invest in the Fundrise Innovation Fund, you can own a stake in Anduril, OpenAI, Databricks, Anthropic, Canva, and Ramp, just for starters. So really extraordinary, I think, win for Fundrise and the Fundrise Innovation Fund and Ben Miller for putting together a portfolio that happens to be at the top of this CNBC list. It's quite a flex if you ask me. And I think I'm a longtime investor in Fundrise since 2017. I've been investing in the real estate funds. I invest in the Fundrise Innovation Fund since 2022, since the earliest point that I could invest in it. And I tell people about this fund through Access IPOs because I think it's a great way to invest in these companies, and it's a rare way to invest for ordinary investors, for non-accredited investors. You don't have to be a millionaire to be able to invest in Anduril and OpenAI and Databricks. You can do it through this fund. So I'm a long-term investor and affiliate partner too. There's a link in the description if you want to check out the Fundrise Innovation Fund. Use that link in the description or the show notes to open your account, and I'll get a commission for that. But in terms of pre-IPO access, this fund, the Fundrise Innovation Fund and the ARK Venture Fund, are the two really only good options for retail investors. And the one downside is you have to open accounts with these companies, with either Fundrise or with SoFi, to invest in the ARK Venture Fund because they are non-traded. But it doesn't fluctuate like the stock market does. It's more of a steady growth, and it's certainly a long-term holding. This is not a tradable asset. There's only quarterly liquidity, and it's meant to be a 5 to 10 year investment. So check out the link in the description if you're interested in learning more about the Fundrise Innovation Fund, and if you want to invest in these top 6 companies. Other companies in the fund include Stripe, although they don't promote that. They have a small investment in Stripe if you check out the SEC documentation. And that's it for the list. It's really those top 6 companies in Stripe that are part of that Fundrise Innovation Fund. Last, I want to talk about 5 companies or maybe 6 companies in the Disruptor list that aren't on my radar that I'm actually learning about through this list. And every year I take this list and I dump it into my IPO seed list, which then I dump into some other data resources and try to come up with what I'm going to put on the official radar. And so I looked through all 50 of these companies, or the companies that I hadn't known about already, and I picked out my favorites. So these are my favorites because I think the technology is cool, or I think there's an opportunity to really disrupt. And there's actually a few in here that I think aren't all that exciting. So I'm going to tell you my 5 favorite companies on the list, and then I'm going to give you a few that I think are really not that interesting, just because I think it needs to be talked about. Some of these aren't all that disruptive, or they're not in disruptive areas, in my view. And I'm not doing a deep dive on these companies. This is just my first impression. So let me know what you think in the comments, or which ones are your favorite. I'll put a link to the Disruptor list, and you go in there and say, hey, which one's your favorite? Maybe that's not on the IPO Radar list or that is. and let us know. I think a lot of people are going to say OpenAI and Anduril and Databricks, but there's other companies that are worth less than $1 billion on this list, and I'm going to highlight a few of those right now. So the first one is Carbon Robotics, and this is certainly not the first time I've heard about this company. It's kind of a boring name. You don't remember Carbon Robotics like you remember an Anduril or Apptronik, but Carbon Robotics says they're AI and cloud computing, but really they're a weed zapper. They use lasers to zap weeds in farming equipment. Supplied with a database of 40 million images, the AI-powered ag tech system shoots lasers as it passes over rows of crops, with machine learning enabling it to recognize weeds and kill them at the base using a laser, replacing the need for both manual labor and herbicides. The company says it has destroyed more than 15 billion weeds on more than 100 crops. So talk about cool. Your robotic laser shooting weeds. It's just like a really interesting technology that nobody had thought of before, maybe. And maybe this has applications in other areas. And I think it does say that we'll probably do things well outside of just the agriculture industry. This replaces the need to put poison onto our food, herbicides that kill weeds that maybe hurt us. It says it's gotten 157 million in funding. It's based in Seattle, Washington. This one I really would like to write about because it's interesting and it has a big total addressable market and possibly some other applications with this technology. Number 2 on my list of favorites here is Saronic Technologies. Founded in 2022, headquartered in Austin, Texas, valued about $4 billion already. It's raised $850 million in funding. This is artificial intelligence, but I think it was more autonomous vehicles in defense. This company makes autonomous water surface vehicles. It says it enhances national security in the maritime sector for both the U.S. and its allies through combining AI, of course, data analytics, advanced sensors, and communication technologies. Saronic ships are built to endure challenging conditions at sea and respond to various forms of attack. So if you think about it, maybe an aircraft carrier from an adversary is entering waters where they're not welcome, and instead of sending out a motorboat with a couple Navy SEALs in there and putting them at risk, you throw out maybe a swarm of these autonomous boats to get some reconnaissance. Maybe they carry munitions. But this sounds like the future of warfare, which we already know is top on investors' minds with Anduril. And Anduril has shown that it's been willing to make acquisitions. This could be one of them. And I think this company really fits into the mold of disruptor because the defense industry is so bloated. They've just had this luxury of so much money, billions and billions coming at the Lockheeds, the L3, Raytheon, Northrop Grumman. These companies have gotten so much money over the years. They've just hired so many people, and it takes them such a long time to design, to build weapons and support vehicles for warfare. This is certainly a trend that we're going to see more of, is defense spending, how to reduce costs so that you can scale up to eventually confront an adversary. It's going to have to cost less money and put fewer lives at risk. And this Saronic Technologies seems to have a pretty cool technology for that purpose. Next up on my list of new favorites is GrubMarket. GrubMarket is a food supply chain company that seems to be addressing this old guard of companies that deliver food, like a Cisco, like US Foods. There's a huge cost to domestic transport and logistics. And when you're dealing with food, you're dealing with things like refrigeration and expiry dates. This GrubMarket seems to be almost like a flexport for domestic food delivery. It's raised about $600 million. Its valuation, $4.5 billion. Artificial intelligence, cloud computing, generative AI, but it's a logistics company. GrubMarket's platform is now used by thousands of institutions and brands, including Whole Foods, Safeway, Fresh Direct, 99 Ranch Market, plus restaurants and corporate offices. Its revenue grew more than 12-fold from 2020 to 2024, and it's modernizing one of the world's oldest supply chains. This was a brand new one to my radar. I hadn't heard of it before. I do like logistics companies. I think there's an opportunity to save money. If you've ever taken a logistics course or supply chain course, you know how important it is. And the companies that win in this market win in business as well, Walmart being the most notable. So this one's one to watch. I'm putting it on my radar, at least my seed radar. And if there is more interest in the company, I'll add it to the list of articles on the website. Next up is Vast Data. Number 4 on my list of new favorites, also artificial intelligence, headquartered in New York City, founded in 2016. This is a $9.1 billion company with funding of $381 million. Vast Data has an ambitious goal. It wants to redefine the data infrastructure stack for generative AI from the ground up. I don't have a background in data infrastructure or IT infrastructure, but I did work on a few projects where I was a government consultant and I was brought in to help figure out what was going on with an infrastructure problem. And I was partnered with a real expert. I was more there for project management. But the data infrastructure and IT infrastructure is such an important part of any business. And the way that things are set up now are based on older technologies. Vast Data is setting up the full stack of computing for the AI future. So big data, AI, data storage, data infrastructure, these are all buzzwords that are important and they're really over the head of most of us. But the real reason I added this one this week is because just 2 days ago, the same day this thing came out, we got an article from TechCrunch that said AI storage platform Vast Data aimed for a $25 billion valuation in a new round. It's up from a $9 billion valuation in December 2023. Vast Data offers data management software coupled with unified CPU, GPU, and data hardware. AI has just been a boon for this business. It has customers like ServiceNow and xAI, as well as next-generation AI cloud providers like CoreWeave and Lambda. So this company is partnering with all the big names, and it's providing a really critical infrastructure piece of the AI future. So Vast Data seems like an obvious one on this list. I have a feeling it's going to move up the list next year. Number 40 right now. I bet you we see that in 2026. And I'm going to watch it for the radar. And at that $25 billion level, that's a point when people are really starting to notice and it hits the top, 20, 25 list of largest startups in the world. So for that purpose alone, it may make my IPO radar list on the sooner side. And the last company I want to highlight, actually a couple companies, and they're in this industrial robotics space. There's one called Exotec and Gecko Robotics. These both provide a specific type of robot for a specific use case. Exotec is really specialized in warehouse robotics, which is critical for all kinds of applications, both manufacturing and delivery and logistics. The other one is Gecko Robotics. This is a Pittsburgh-based company. I'm from Pittsburgh, so I like to pay attention to these companies. And a lot of their robots are for inspections, and they use things like drones and crawlers that can go up walls and inspect bridges and big concrete structures that need to have no cracks in it. It says Gecko uses fixed sensors and robots that climb, crawl, swim, and fly to build first-order data layers on the physical world. We combine those data layers with the predictive power of AI into a single source of truth for the physical world. I like that. I'm looking at this video online or this graphic. It's showing their cantilever product. Their drones or their robots can build a 3D model of where there may be damaged, what looks like a big concrete cylinder, maybe for gas or water. It says here it's an acid tank. So it has applications in steel and mining and pulp and paper and defense and energy, power. So Gecko Robotics, I really like this industrial play because it's helping companies that have to do all this work anyways, helping them do it easier, helping them do it safer, and ideally at a lower cost. And they can identify things like structural problems and fix them before they break. Exotec has a series of robots and systems that can solve complex challenges for the total warehouse. And humanoid robots get all the attention, but I think it's these specialized robots that have better application. And the humanoid robot stuff's going to be really cool. You can program them to do things, but they're not going to be as good as these types of robots that are specialized to do a very challenging piece of work. A humanoid robot can't fly up and take pictures of infrastructure or power lines or things like that. And it can do warehouse work, but it looks like this Exotec company would be able to do warehouse work more efficiently because it's got specialized robots. So that's actually 3 robot companies I've talked about: Carbon Robotics, Gecko, and Exotec. Certainly a big theme for this year's Disruptor list. A couple runners up. There's a company called Sierra I've heard about. Sierra is meant to help companies improve their customer service through AI agents. I saw an interview with their CEO on the Harry Stebbings podcast, 20VC. There's another company here, Abridge, does note-taking for doctors, and I actually think there's a lot of these companies out there. Abridge is also a Pittsburgh company, so I'm paying attention. It's about a $2.7 billion company. Glean is enterprise search. It just raised at I think $7.5 billion valuation. That's going to be on my IPO radar list soon. I certainly want to touch on that one. Harvey is AI for lawyers. So a couple companies that are, I think, a little more interesting than others. And there's a few on here that I was just kind of curious why they even made the list. Lead Bank is a banking as a service company, but there's a lot of companies doing this. Cross River Bank is one that we've highlighted before. I don't know why this particular one got on there. It didn't seem all that extraordinary to me. Maybe it's growing in revenue and that's why. There's another one called Fruitus, which is, they call it the berry unicorn. It grows fruit, and I was expecting some sort of thing to that, like either grows fruit indoors at a lower cost. But really, it seems like they just make bigger fruit, like bigger berries. And I was like, well, how do they do that? And it says on their website they're non-GMO, so they're not genetically engineering these berries. I guess they're just finding the right types of berries and helping to grow them, and they're doing it around the world. But I didn't really see anything all that impressive with Fruitus, other than it's a fruit company that's maybe growing quickly, but they're just growing fruit at different places around the world. I don't think that has a big business opportunity. Maybe they can maintain their fruits quality longer and their bigger berries for a heartier snack. But other than that, I think it's more of a marketing company almost, just having a pretty cool name with Fruitus and getting on this list. And the last one here is AlphaSense. This is a financial data market intelligence using AI, and there's so many financial data providers out there. I don't know why this one made the list. Maybe it's selling and a lot of people are using it, but I feel like there's nothing more ubiquitous right now than AI financial data. Again, these are all just first impressions and maybe doing a few minutes of peeking around the websites for all of these companies. So that's all for this segment. I did want to touch on one thing that I didn't mention at the top, and that is that they interviewed Palmer Luckey, the CEO of Anduril, on CNBC earlier this week when this list came out, and he confirmed what he had said to Bloomberg's Ed Ludlow back in January 25. He said that Anduril is going to be a public company one day. It's going to IPO. There's no timing to it. He can't tell us the timing yet. The way he said it, I thought had more conviction than the way he previously said it. His thought is that if he wants to grow the company to where it can go, to scale, he's going to need more and more government contracts, U.S. government contracts. And if the U.S. government is going to be giving his company money, he feels that the public should be able to participate in the growth of the company. It's taxpayer dollars that are going to fund his company. And so it's great to see that attitude that, hey, we want to become a public company to allow retail investors to invest in us, to get us into your retirement accounts, your 401ks, your IRAs. And that's exactly what I believe on this podcast and through the work that I do, is that these big companies should go public so that we have an opportunity to invest in them for the long term. Anduril has grown to a $30 billion company. It just closed a round recently, raising, I think, $2.5 billion at a $30.5 billion valuation. We've missed out on going from zero to 30 billion. It would be nice if they'd IPO'd a few years ago. But nonetheless, if this company can come out at a $30 billion to $40 billion valuation, that would still give us an opportunity to invest in its growth. Anduril is definitely in the top 5 of most popular private companies that my readers say they want to invest in. When someone subscribes to my newsletter, I always say, hey, reply and tell me who you want to invest in. Which of these companies do you want to own? And XAI, SpaceX come up a lot, but Anduril certainly won in that top 5 list. So good to see Palmer Luckey confirming what he's already said, but what we truly believe is that these companies should be public so that we can invest in great American companies. When will the Anduril IPO date be? I posted on X about this. I actually think this could come out in 2026 with the popularity of the recent IPOs, and that the window is open. We've been talking about that. And being a domestic defense company that maybe doesn't have as much exposure to tariffs, and we are in a defense-friendly political environment, 2026 seems like a good timing for this company to go public. Even if they're thinking about it right now, it's going to take probably a year to get to that point. But we'll be watching for any news updates to let us know if there's any clues, like they've hired a bank or they've hired a CFO that's maybe done this before, an IPO. Anduril on the top of the disruptors list this year, and certainly in our top 5 of hopeful IPO wish list companies that will move forward. If not in 2026, then I think a pretty good chance it would happen in 27 or 28. Let's move on to IPO Radar news. Talked a lot about radar companies in this episode. You already know what they are. I just have one story this week. I think the disruptors list took up a lot of the bandwidth, and we're entering the summer. Kids are last week of school for us here in Virginia, and I think that's true for a lot of people. Swimming pools are open, kids are home, and so there might be a little bit of a pause in big news stories. A big news story came out last Saturday night, and it's rare to see a story come out Saturday night, but Bloomberg got the scoop, and they wanted to get it out before they got scooped by other news outlets. That we did see a sort of a cascade of scoops on this story. And the company on our radar list that we're talking about is Scale AI. The story that Meta is in talks with Scale AI for an investment that could top $10 billion. We learned a few days later that they're actually looking at closer to a $15 billion investment in Scale AI. And that's a 49% stake, which means that Scale AI is now valued at about $30 billion. But more significantly is that Facebook is essentially hiring the CEO of Scale AI, this guy named Alexandr Wang, and he's one of the darlings of the AI wave. He's the founder of Scale AI. He's only 28. He was a lot younger when he started the company. It was a $14 billion company at its last funding round, and this really cranks up the valuation. There was talks that there was a funding round happening at about a $25 billion valuation, but I guess Zuck stepped in and said, hey, we're not going to let this happen. We want to own nearly a majority of the company. So what is Scale AI? Scale AI is what Alex Wang described as a pickaxe in the gold rush of AI. Looking at their website, power your data, make the best models with the best data. Scale Data Engine powers nearly every major foundation model with the Scale Gen AI platform, leverages your enterprise data to unlock the value of AI. So as I understand this company, they provide data to the LLMs and to the AI companies, and they're calling this tagging data. And it's essentially, Scale AI has people working around the world that look at objects in images and words and things and videos and sort of tags them to say like, oh, hey, that's poison ivy. And they might tag poison ivy, and they train their model to recognize an image of poison ivy, or it could be a car, or it could be a building of some kind. And they call this human feedback, that you need some amount of human feedback to train these LLMs. And that's what Scale AI does. And the fact that this young guy noticed this need several years ago and built a company around that need is really extraordinary. So it says here, the mission is to accelerate the development of AI applications, helps its customers manage the machine learning lifecycle, annotate, manage, automate, evaluate, collect, and generate data. Scale AI hires remote contractors worldwide to label data, including images, video, and text. The labeled data helps to train machine learning models for applications like autonomous vehicles, computer vision, natural language processing, LLMs, high-quality data sets. Alexandr Wang, founder and CEO, dropped out of MIT to start Scale AI in 2016 at age 19. It was part of the July 2016 Y Combinator cohort. He said in 2018, he told TechCrunch, our goal is to be a pickaxe in the AI gold rush. This is, of course, a couple years before OpenAI launched ChatGPT. So a real visionary in the AI space. And Meta, Facebook, Mag7, one of the largest companies in the world, it feels like they're falling behind in AI. They have their Llama open source LLM and AI model. And maybe they feel like they're falling behind because they went all in on the metaverse, and no one really cares about that. When AI came around, everyone shift focused away from the metaverse into AI, and maybe he feels a little bit behind. But this story is starting to show a pattern of these massive tech giants, the Mag7, we call them, that are taking over fast-growing startups, important startups doing important, innovative, and disruptive work before they get too big. We saw Wiz get taken out by Google. Alphabet wanted to buy Wiz at a $24 billion valuation, and Wiz said no, and they came back at a $30 billion valuation. I think that's where it closed. But Wiz was this really powerful and disruptive cybersecurity company. Google, once they put their eyes on that target, they decided there was no price they weren't willing to pay to acquire Wiz, and Wiz was one on our radar that we wanted to see go public and become a company that we could invest in. And that $30 billion company got swallowed by this $2 trillion company and disappeared. And that growth, we're never going to experience that growth of Wiz. We'd much rather that be an independent company. We also saw this with Inflection AI. Inflection AI is another AI LLM provider, and the founder, the main guy, I forget his name, but he's one of these really early Google DeepMind guys. And Microsoft saw the talent in this man, saw the value in the company Inflection AI, and they essentially hired the guy away from his own company and sort of swallowed. I'm not even sure where that one stands. This is a similar situation where Scale AI was scaling fast and growing fast. And at that $15 to $30 billion valuation, it's an affordable company for a Mag 7. Now, once that company had gotten into a $40 to $100 billion valuation, it would have been a lot harder for Facebook to justify spending that much money on it. So they've made this investment at this 49%. And what the article says, and this makes a lot of sense, is that Meta didn't take over Scale AI. It bought a 49% stake, and it did that because of antitrust problems. Meta has already had some antitrust issues with the government, and if they were to just take this thing over, the government might step in and say, no, this is an overstep, this is monopolistic, we're not going to allow this. And so to avoid that problem, they just say, hey, we'll take a 49% stake, and by the way, we're going to hire one of the most influential AI scientists, entrepreneurs out there, and he's going to be part of our team, and that's going to launch a new lab and grow this company to the stratosphere with AI. This is a trend that I don't like. I want to invest in Scale AI as a public company. I'd rather see it IPO at a $30 billion valuation and be part of our index funds going forward. But if it gets swallowed up by Facebook, the growth is going to be just kind of swallowed up in that trillion-dollar Mag 7 or multi-trillion-dollar Mag 7 company, and we're not going to be able to experience that as independent investors. I own Facebook, I own Meta, I've owned it for years, and it's a great company. It's been a great investment. With this 49% stake, you can technically invest indirectly in Scale AI by owning Facebook, but Facebook's so big that you're not going to experience that growth of Scale AI's business through Facebook. The one way that this maybe does turn into an investment opportunity is if the Scale AI acquisition really explodes Facebook's ability to take market share in the AI space. It's competing with OpenAI and xAI, and Facebook wants to be a part of that. It's still a little unclear, the future of Scale AI, if Facebook owns half of it or nearly half of it, if Scale is going to grow into becoming a public company or if it'll get swallowed up by Facebook eventually. Maybe it's testing the waters to see if the regulators care or if they sniff this out. But the bottom line is that Scale AI is not going to be the kind of company that we're going to be able to invest in, I think, for the long term if Facebook's got its mitts in there trying to take it over or influence everything. Now, the way to avoid this kind of takeover is to grow really, really fast. That's what's happened to OpenAI and xAI, which is now at $120 billion valuation. OpenAI is $300 billion. So Meta is taking advantage of this period in the growth when the company is cheap enough for them to acquire before someone else does and before letting this company move forward with becoming public. I suppose it's still possible that Scale AI could grow into a public company and Facebook could sell off some shares or they could just own half of it. But that seems unlikely now. I think what would be more likely is Facebook would eventually take it over. But the details of what's going to happen are unclear. All we know now is it's 49% stake. We know the value, and we know that the CEO is going to work for Facebook. That's all for the show this week. If you like what you're seeing, please let me know in the comments. Please let me know what your favorite disruptor is in the comments if you're on YouTube, or you can comment on Spotify and possibly other platforms. If you want to support the show, just hit that like or subscribe button wherever you watch videos or listen to podcasts. You can also subscribe to my weekly newsletter that comes out on Sunday mornings, and it gives you a little reminder that there's a new podcast out there, highlights some other things that aren't in the podcast, like new radar companies that I've written about, and other items that I just don't get to talk about in this 30 to 40 minutes that I do the podcast. If you want to connect with me and other like-minded investors, join the Access Club. That's our Patreon membership. It's just $5 to join. You get a lot of bonus content like IPO Radar news that I update all over the website in just one centralized area. You get deal alerts for pre-IPO opportunities that are happening that you might have missed otherwise. I follow lots of different platforms to see where the best deals are. So I share those insights with members, and we talk about IPO allocations. If there's an upcoming IPO, it's a great place to learn from other investors what kind of IPO access is out there, where they're getting allocations, and where they're seeing the best opportunities to get access to deals that most retail investors don't know about. Join the Access Club. It's just $5. Go to patreon.com/accessipos. Thanks for watching. Thanks for listening, and I'll see you next week with a new episode. This video is not a recommendation to buy or sell any startups mentioned. Pre-IPO and IPO investing involves significant risk. Conduct due diligence by reading the SEC S-1 filings before participating in IPOs. Do not invest in IPOs with money you cannot afford to lose. Thanks for watching.